Matt from Optimus Futures. I haven't done a video in a long time. We've been a little bit busy over here, but whenever I do have a moment, I always jump in because there's always topics that I want to add as I discuss with customers. There's always new concepts that come up, and there's always new ideas that I can give you guys, and hopefully it will inspire you. So one of the things that I wanted to talk about today is really what is your definition of of your specific strategy. So, when I ask people what's your strategy, sometimes they go on and on and on for 5 to 10 minutes describing how they look at the market. And it's fine because there's different ways to look at market, and there's nothing wrong with that. But what I would suggest to everyone that is still defining their futures trading strategy or their forex trading strategy is to sum it up in one sentence. Really, try and sum up the entire methodology in one sentence, because that is when you get it to simplicity. And you might say, well, how do I do that? Because there's 1,001 scenarios in the market. That is irrelevant. You can say, I am looking for levels that are oversold or overbought using this method. I'm using order flow method to detect when there's large volumes in the market and at the same time no movement. So there's a gap between the volume that's occurring at that moment and the actual lack of or very active markets that's happening at the time. So try to define it to one sentence. It doesn't have to be a short sentence. It could be, maybe 2 sentences, but the point is to have it very short. From there, what you want to do is, this is your model. And from there, what you want to do is have a variation on that model. This is how you improve the model. So you don't define it in your definition of strategy, but this is what you're saying to yourself. What if it doesn't fall exactly the way it should be? What if the ranges, for example, become wider or narrower, or the market with the same strategy goes sideways, or if it's trending too fast on the upside? And once you have a simple strategy, and then you have contingencies for every single market that happens, what will happen is that you will be able to be flexible as a trader, and you won't get stuck if circumstances change on you. When circumstances do change on you, you will be able to adopt at the same time risk management, because you can't think of changes without risk management. Let me give you an example. Let's say that your methodology calls for 2 points profit in the market. So you define your strategy, and then you say, okay, my strategy should allow me to pick 2 points in the market. Great. My stop loss, and again, stop loss is not guaranteed to get stopped exactly where you want it to be. There could be slippage, or market conditions could be very, very harsh, and markets can, again, gap. But let's assume under most normal circumstances, you have your targets and you have your stops, right? But what if the market is becoming too volatile for the type of strategy, or it's too narrow, or you have to wait for too long? So now you adopt the strategy for the profit taking and the risk management at the same time. So simple definitions of strategies that you can define will allow you to have better ways to rectify and also alter and change the method itself if market conditions change. Again, think of it this way. If somebody comes to you and says, let's say your friend comes to you and he says, what do you do here? And you're going to say, well, I'm a trader. Well, what do you trade? You tell them the instruments. You can say, I'm a trade crude oil, I trade the mini S&P, I trade the micro NASDAQ, whatever the instrument is. And then he's going to ask you, well, how do you know what to buy and what to sell? Right? At that point, this is what you have to think about. How do I define it with one strategy? Without going on and on and on the chart, look at the market goes here, I'm selling here. Because if you do that, it means that your strategy is simply not defined enough. There's too many variables to think with, right? So let's assume a simple strategy, right? And then let's assume a multivariable strategy, right? And there could be multivariable strategy. for very sophisticated traders or algo traders. But for most traders, it should be short, right? And you can alter that in different directions. Imagine you have all those variables now you have to change. Let's say one sentence versus a whole story of, let's say, 50 sentences or a page. Now, every single one of those variables that you defined needs to be adapted to new markets. So you have like a tree, right, that's growing with variables, as opposed to one definition, change, this is what happens here, this is what will happen here, that's it. Now, most of the time, the market is in a range, right? So it's either you have a range or you have a trend. That's all you have. Well, a trend could go down, go up or go down. But that's the only thing that happens. But the difficulty is how wide each one is. How wide is each range, and how fast trends are going up or how fast they're going down. And even within trends, there could be ranges as well. So those are all the things that you have to think about, right? Think about, again, I'm going to repeat it, simple strategy defined in a sentence or two, then multivariable thinking of what happens if the markets change, and how do you change your targets, and how do you change your risk management. I hope this helps you, and until next time, this is Matt Z from Optimus Futures. Please click like on the video. I'd love to earn your business here at Optimus Futures. If you're looking for a futures broker, please call us. Again, it's 1-800-771-6748. Local number is 561-367-8686. I talk to everyone. If you call me and you ask for me, we can have a chat about your strategy. I look forward to hearing from you, and have a great trading week. Thanks. Bye.